Glenn, good to have you. So what's the latest literally as of this morning?
So what we're seeing is the market is extremely volatile. As all of us watch news every single hour, but rates are increased up to 3 to 5x what they were as of a few weeks ago. So shipping costs to go from China to Europe can be upwards of $40,000 per container right now.
Wow.
And that is a significant cost difference, right? It's about 5x what it was before. And if you compare to pre-COVID times, what many of us were used to, it's up to 20x more. So it's a very volatile market right now, and folks are scrambling to figure out how do they get product into Europe right now.
How is it affecting costs on those key routes coming into our West and East Coast ports?
So right now, it has not impacted costs yet, other than fuel surcharge, which we'll see increase significantly, especially as news continues to roll out about some of the Russian oil firms. From a container cost, though, we do anticipate it's going to increase cost anywhere from about 20 to 40% in the transactional market. And that is mainly due to a already constrained ocean network. So it's been covered over the last 6 months, what's been going on there. And, we as supply chain operators have been struggling, and it's more fuel on the fire that we don't need right now.
Why, Glenn, will the costs to transship goods from Asia into Europe go up so much? What is it about the shipping lanes or the routes that either land-based shipping or sea-based shipping will take that will make it so much more expensive?
So there's two main reasons. So one is the Eurasian rail line that goes from China to Europe is going to more or less, be cut off here. And so you're going to see roughly
does it go through Ukraine, or why? Why is it going to be cut off?
It goes through Russia and then ultimately to Poland. And so with more and more sanctions being levied, Russia is kind of a no-touch zone for a lot of companies. And so we're going to see all that volume move to either ocean vessels or to air freight when it's critical products. So we're going to see a already constrained ocean network that's shipping from both Asia to Europe and Asia to the US take on more volume. And it's not like there's vessels standing by. So, that's the first reason. The second reason is kind of what I just touched on, which is these ocean vessels are already at capacity, and to play the transactional pricing market in ocean freight is very expensive for companies.
So finally, Glenn, how quickly could this all be resolved? Or to put it differently, how long now might these cost pressures continue for, an economy that was hoping we were seeing peak supply chain and inflation problems already?
So it's a big question mark. I think, if, fingers crossed for, the safety of everyone in the world, especially Ukraine, we hope this ends tonight. But, even if it were to end tonight, we're going to see a residual impact over the next 2 to 4 weeks at minimum. And that's in part as sanctions are put in place, and companies are really trying to figure out right now, how do I get product to other suppliers and manufacturers if I was impacted by this? But, assuming that this goes on for the next 2 to 4 weeks, we're going to see this carry on into the summer.